existed around this market. At this point, you see this massive rally in the dollar during the initial phases of the invasion of Ukraine. And the narrative here that would exist is that if you said you were going to buy rubles, everyone would come out of the woodwork to tell you you're an idiot and you're going to lose all your money and that the ruble is going to go to zero. And that was a very popular belief at that time in the market. But what we've seen is the ruble has just increased in value extremely dramatically since that point. And it's even more impressive if you look at the dollar chart, right? So if you consider what the dollar was doing there during that time period, just going parabolic over a period of months and weeks. If you think about it that way, and going back to the ruble chart, you could characterize this as the most parabolic price move in the ruble in a short-term time period that's ever existed in its history. The ruble has never increased in value this much in a short period of time. And I don't think that it's not representative. It's not like the ruble some great fiat currency or some revolutionary thing. It's just, I think it reflects a disruption in the energy market. We'll talk about more about that soon. So, here's Russia's current account surplus. So you can see that what this is representing is they're making a ton of money from the disruptions in the energy market, from the rise in the price of oil. If you haven't seen the price of oil, it's going up pretty dramatically, and Russia's benefiting from that disruption. Well, the sanctions as well. You have American politicians issuing sanctions against Russia, and they're doing it with their justification for it is that it will hurt Russia financially. Well, it hasn't hurt Russia financially, pretty obviously, right? They're doing just fine. They're tripling their gains from the previous years. But the problem is, when politicians take a stance like this and it backfires and it does the opposite of what they intend, then nobody ever takes accountability for it. Nobody ever takes responsibility for that failure. They tend to just double down on the same stupid idea and just ignore the reality that it doesn't work. But that's beside the point. Here is the petrodollar windfall. You have Saudi Arabia's earnings, right? Saudi Arabia's also, benefiting from the disruption in the energy sector, the price of oil. So how does this all tie into Bitcoin? Well, Bitcoin's hash rate is going, hitting all-time highs. Bitcoin, there's a couple things going on here. So the hash rate is probably just going to continue to hit all-time highs because of exponential increases in computing power and computing technology, right? It just drives the price of mining rigs down over time. So you have that competing with the price of energy. So the decline in the cost of computing power with the rise of the price of energy. So those two things are at odds, and it looks like the rise in computing power is winning, and you'll probably see a secular increase in the hash rate just over time. And so how does that tie into Bitcoin on a price level? Well, I would draw your attention to this chart. And this chart, what we're looking at is the kind of a macro chart on Bitcoin and showing the cost of production for to produce a Bitcoin or to mine a Bitcoin out of the network. So it's a very general area, right? It's not a specific area. There's a lot of different market fluctuations, and the cost of production could, it varies depending on a lot of different variables that, is a topic for another video. But generally, you get a general region where, right now price is trading it in a region where, it roughly costs $30,000 to produce a Bitcoin. And I've always struggled with the idea of how do you value Bitcoin. Typical valuation models utilize, equity valuation models that look at cash flow. Well, obviously Bitcoin doesn't have cash flow, so how do you value it? How do you value this asset? Well, it doesn't have cash flow, but it does have a cost of production, which is what we're looking at now. I forget who said it, but there's a famous quote that goes along the lines of, that commodities over time trend towards their cost of production, meaning that Whenever you have a reversal, maybe you have a wild bull market, you have a reversal, price will trend towards this cost of production, and vice versa. And you can see that here in Bitcoin, right? But Bitcoin tends to spend its time well above the cost of production, doesn't really violate it. You can see here that, price comes down, and these areas serve as pretty significant bottoming areas. Again, it's a pretty big region, right? I mean, you have these are like 20% drops here, but you can see the price does respect these levels, especially when it gets extended below the cost of production on the bottom range, right? Those are very sharp recoveries right there. And it's interesting to note that, well, what happened here is the incentive structure in the market is such that, as if miners step into the market at this region, because price is trading dramatically below the cost of production, they're just making a shitload of money, and it incentivizes all this capital to flow into the market and naturally forms a bottom. I mean, it's just the incentive structure that exists in Bitcoin. And it's just interesting because it's so opposite from like the sentiment that it would exist in the market at this time, right? This is like peak fear, right? So meanwhile, big capital is being incentivized to step in. People's sentiment doesn't align with that reality, right? At this point in the market, people naturally think the price could go much lower. Similar to what we're trading at here, right? Prices enter the cost of production area, and people's perception of how much lower price could go is very, skewed to the downside, at least in my opinion. Of course, price could trade lower, but point is that, there's a lot of resistance, natural underlying resistance at these levels. So just something to keep in mind, right? If you are bullish on Bitcoin, and Bitcoin is trading at its fundamental value, then you should have some significant exposure. That should go without saying. Now, another thing I want to talk about is that Bitcoin, what Bitcoin's doing to the energy market. Bitcoin gets a lot of heat for, essentially for not being green or not being efficient. And really what Bitcoin's doing is it's tapping into some of the incentives that would unlock green energy or naturally occurring energy. And the reason why it's doing it is it's solving the problem of trapped energy. So right here we're looking at the solar energy output. What this represents is if you were to build an industrial scale solar panel operation, like a big solar panel farm, these are the areas you would build it on because you'd naturally get the most energy. And they tend to be desert regions like the desert of America, the desert of Chile, South Africa, and a little bit of North Africa and Arabia, some other desert areas, but you get the idea. I actually knew somebody who worked as a solar panel manufacturer, and he built and sold solar panels for a living, and he outfitted his whole home with solar panels, and he made so much money that he was able to finance all his energy needs in his home and excess to sell into the grid to make a profit on that, and far exceed his capital expenses for purchasing the solar panels. And it was greatly profitable on an individual level, but he always had this problem where he couldn't, on a business industrial level, there were a lot of roadblocks and hurdles because solar panels, that industry is very difficult to scale on an industrial level, partly due to this reason. I mean, I would argue this is a major reason. There's other reasons too, but this is definitely the main one. And the Bitcoin steps in and solves that issue, right? I mean, now you can build a solar panel farm and take some of the trapped energy produced and use that to build, to secure the mining network. You can, the same idea is why mining popped up in China, right, around the dams in China. China has some of the largest waterways and natural occurring waterways and that were dammed, and naturally people don't live around those areas because of the inherent flood risk. Well, you can come in, a miner could come in and secure that energy and become extremely profitable, because that energy would have otherwise have gone to waste, and so it's naturally very cheap. Get an edge over the market, come in, becomes very profitable. Again, coming in, utilizing energy that produced no carbon emissions and would have otherwise gone to waste. Now, if you looked at a map, if we did a map here of if we mapped out the areas that have the highest wind energy, you would get different areas, but also probably areas that are not very inhabited, right? Because you naturally don't build a house in a wind tunnel, right? People aren't going to build their houses in these high wind areas naturally, for the most part, or near these major business centers. So you would, if you're doing wind farming, you would also run into the same issue, right? Wherever the best place to build your wind farm is probably not going to be right near a major civilian center or business center. So you're going to encounter the same issue with trapped energy. You have the same thing in El Salvador, right? President of El Salvador is using Bitcoin to mine geothermal energy from volcanoes. People don't live around volcanoes for obvious reasons, right? I mean, it's just not a great place to live, but it also has naturally occurring energy just exploding out of the earth that you can capture and monetize and solve that fixed energy problem. So Bitcoin is creating massive innovation in the energy market, and it's really difficult to predict like where that will end or if it even has an end. But I think that what we'll see, you have these two competing forces against the price of energy. Essentially, you have this stagflation, inflationary environment of massive money printing that's just driving up the cost of real assets, right? Like nature puts a supply cap on energy, right? There's only so much oil you can pull out of the earth, right? You can print an unlimited amount of money, but you can't. You can only pull so much oil out of the earth. So in those inflationary environments, you see upward pressure on the price of energy, but you also have massive energy innovation occurring because of this new incentive structure unlocked. And one of the cool things about Bitcoin is that, despite being in, the arguments that it's energy friendly, it's incentivizing people to take a look at some of these green energy areas that they wouldn't have been able to look at previously, right? And because of the issue of trapped energy is solved that we discussed earlier, but also because of the rise of prices of fossil fuel energy. So you have at the same time you have this rise in the cost of natural gas, the cost of oil, and as that price rises, that's going to incentivize people to start taking more serious looks at green energy, right? Because especially the naturally occurring energy sources that we discussed earlier, right? That's not affected by inflation because it has no cost of production, because it's just naturally occurring in the environment, and all people need to do is to step in and capture it, right? It's already there. And a lot of the innovation in the energy market is occurring in those areas as well. But as that innovation expands, what you'll also see is a lot of capital flow into the market from investors on top of it, seeking that, the next big thing. As capital flows into energy, then you get like the big innovations, like, innovation to like maybe nuclear energy, maybe nuclear fusion is discovered, and that would revolutionize the game, right? I mean, that would make energy like 100 times cheaper, right? So even if you have this massive inflationary environment in the world where oil's like doubling in price every year, but the price of energy is declining by 100-fold due to massive innovation, you could actually have a scenario where the price of energy is declining despite these massive inflationary pressure. In a scenario like that, then the cost of production for Bitcoin would drop, and but there's a lot of different